On this episode, we're going to discuss best practices to get your fix and flip deals funded. Hi, my name is Beau Eckstein with the Investor Financing Podcast, and thanks for joining us on another episode where we're going to talk about tips, tricks, and best practices to get your fix and flip deals funded. So what do we need to get started? All right, so the pricing is dictated by experience, credit score, and the different lenders, right? They all have different pricing and guidelines. Essentially, they're similar, but they're different in many ways. So we're going to talk in generals today, but this is good information for you going forward. If you're newer, or even if you're experienced and done tons of fix and flip deals, it all starts with a couple things: location of the property, purchase price, rehab budget, and ARV. The framework for the national fix and flip lenders is up to 90% of purchase and 100% of repair costs, which repair costs are held back in a construction reserve. Their gross loan amounts are usually capped at 75% of the subject to completed value or the ARV. We did talk in a previous episode, and we'll link down below, about our 100% program for certain people that qualify based on experience. But anyways, the basic documentation you need is obviously a loan application, a deal verification, because pricing and terms are dependent on the borrower's experience. Is this your first fix and flip deal? Have you done 20? So there's a simple Excel spreadsheet that you always want to keep up to date with the deals that you've done. And don't worry, if you've never done a deal, you can still get financing, but you're going to have to listen to the rest of the video to find out how. And anyways, so you want the deal verification form filled out. It's always good to have a PFS, or personal financial statement, readily available and updated as much as you can, because you're always going to need that for commercial financing. Maybe not so much for the fix and flip, but for future deals. So we have the deal verification with the scheduled real estate owned, formed net worth financial statement. Then you're going to need a detailed scope of work with a construction line and a budget. And I have templates for that if you need them. But these are kind of the needed documents going forward: is your deal verification, your construction budget. And if you can have a standardized template, it makes the process a lot easier for future deals. So the point of this episode is just to dive deep into the things that you should have. Now, each lender has a little bit different underwriting process. Some of them have their own forms, and they're really strict about the items completed on their form. Some will take a deal verification on a general Excel spreadsheet. But if you have it done and you keep it as an ongoing working template, that seems to be the easiest way to go. Because as you move to different lenders, they don't know your background and your experience versus that lender that's been funding most of your deals. Now, it's good to look around because lenders have different pricing at different times. Sometimes they offer incentives if they have a lot of capital that they need to deploy. So the best practices to be a good borrower or sponsor is to have a Dropbox folder with everything there, so you have it readily available when you need it. Like when you're going to refinance or you're buying a property, it's good to have your entity documents. If it's an LLC, articles of incorporation, operating agreement, IRS EIN printout. You should have all this in a Dropbox folder. And you should have a letter of good standing. Every few months, you're going to need a letter of good standing for your entities, because the lenders are most likely going to look and ask for that. So those are the documents for your entity. Obviously, if it's a corporation, instead of operating agreement, it's called bylaws. So you should always have signed copies with all the addendums and resolutions readily available in a file, so you can utilize these quickly when you're trying to get your loan submitted. Deal verification, same thing. You should have a working template spreadsheet. Scope of work template, that's very important. You're going to need that quickly because the appraiser is going to take your scope of work and your construction budget when they do the appraisal. So you're going to need that quickly. And that's one of the items that slows down these loans is getting that to the appraiser.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau Eckstein here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. Usually, most of the lenders want 2 months of bank statements, so that's pretty easy to get. They want to see that there's some reserves. Oftentimes, some lenders don't scrutinize as much, but if it's your first deal, just think you're going to get scrutinized a little bit more because you've never done a fix and flip. So that's the general paperwork you need. It's good to have an insurance agent that you can get your insurance policy. Each lender is going to have a mortgage clause that your insurance agent's going to type up, and they're going to have certain guidelines on what's required for the insurance policy for these type of vacant policy, fix and flip type of deals. But that's generally what you need readily available. And for refinance transactions, it's a similar process. Some of them want a deal history, a personal financial statement. Every application process is slightly different, but usually you need these articles and these forms on an ongoing basis. So it makes your life easier, because I know from experience, I have stuff everywhere. When I'm trying to figure it out, it's just better to put everything in one place. Always have a letter of good standing every few months, because you're going to probably need them. And if you need to close quick, some states take longer to get this letter of good standing. Some of them you can just go to the website, print it off, and it's easy, it's free. Some of them charge you a couple bucks. So it all depends. But anyways, that's really the best practices to get your deals funded. And it's a very simple process, right? Buying 123 Main Street, I'm paying $250,000 for it. The rehab budget's $50,000. My ARV is $400,000. Here's 3 supporting comps. Here's my construction budget. Here's my entity documents. Here's a copy of my driver's license. They always ask for a copy of the driver's license or a passport. Here's my ID. Here's my bank statements. So having all this stuff ready to go makes everybody's life easier. And for deal verification, when you put in the addresses, sometimes if the lender hasn't worked with you before, they're going to see proof that LLC that owned the property, you are a manager or owner of that entity. So you want to be able to link up that documentation, maybe showing up. They might ask for an operating agreement on that LLC in the deal verification sheet, showing that you are a managing member or owner of that entity, further document your experience. So that's really all you need for these types of transactions. Obviously, there's some unique deals that come into play. You're buying a partially built house, or it's a mid-construction deal, but generally you're going to need the same documentation all the time. General contractor's information, point of contact for the interior appraisal or BPO, insurance agent's contact information. It's quite simple, but it does make sense to be completely organized with all this information. Hope you enjoyed this short episode of the Investor Financing Podcast. I like to come to you guys as much as I can. We just provide tips and tricks so you can get all your deals funded and grow and scale your real estate investing business. Please like, subscribe, and of course, you can book a call with me below. Thanks so much for watching. See you on the next episode.